afternoon, ladies and gentlemen. Good morning to those of you who are joining us from the Central Time Zones, the Mountain Time Zones, or Pacific Time Zones. I should also probably say good evening to anyone online, who is joining us from maybe across the pond in the UK, or maybe even Australia, or parts of Asia as well. Well, welcome to today's presentation for the introduction to PowerOptions suite of tools. Today we're going to discuss tips on how to navigate the site to help you save time with your options research and analysis. And I'm also going to do a special 10 or 15-minute presentation at the end discussing rollout opportunities, basically just on a couple of covered call positions. So we had some customers calling this week. Just to review how you can use the PowerOptions tools to not only evaluate your rollout opportunities, but some of the philosophies on why it might be better to wait to make an adjustment, even though an opportunity is shown for you on the PowerOptions portfolio tools to roll a position, maybe turn a losing trade into a winning trade. But sometimes it might be better to wait based on the opportunities that are available. And we'll do that in the last 15 to 20 minutes of the presentation when we get into the PowerOptions portfolio suite of tools. Well, before we begin, I also want to remind those of you that are currently on your 14-day free trial to PowerOptions, if you do decide to subscribe to PowerOptions at the end of your 14-day free trial, you will receive an additional 14 days for free. So you'll have use of PowerOptions for one full month before you're technically billed. Now, so you just want to take advantage of that. And there's also several sign-up bonuses that are available if you're moving from a trial membership into a subscription. Well, let's go ahead and get started. We're a couple minutes past the 12 o'clock Eastern hour, and we've got a lot to cover today. And the first thing we want to discuss, of course, is what is PowerOptions. And PowerOptions is a patented suite of search and analysis tools that were designed for self-directed options investors. Ernie Zeriner created the PowerOptions tools about 12, 13 years ago after he retired from Hewlett-Packard. He had been trading options for about 15 to 20 years. Before he retired, and he didn't have the exact tools that he wanted. He wanted a set of tools that would allow him to search across the universe of optionable stocks to identify just those positions in a specific strategy that matched his stock criteria and his option criteria at the same time. So our patented search allows you to do that. Scan across the universe of options to identify the positions that match your criteria, and we do support over 23 different strategies. Once you've identified the positions, you can quickly compare the risk and reward with just a few simple clicks. You could do further research for the stock or the option, run some what-if scenarios with the profit and loss charts. And then we also include, of course, in the PowerOptions tools, a powerful portfolio tool to help you paper trade, track your real positions, and manage your positions as well. We're going to discuss that, as I mentioned, in the last 20 minutes of the presentation. In addition to those powerful tools, we also offer countless educational articles and help pages, not only on the 23 different strategies that we support and other strategies that are available to trade, but also, of course, on the tools and management techniques for the various strategies. Now, I haven't updated this slide recently, but as I mentioned, we've been in business for over 12 years now. And, of course, we have many more years of combined trading experience with the members on staff. Everyone here at PowerOptions uses these tools to trade their personal account. Myself personally, I only log on to my brokerage accounts after I've done all my research and analysis, and when I go to my brokerage account, I just go ahead and place my order. I've done all my decision-making process beforehand on PowerOptions before adjusting a trade or entering a trade at my broker. Now, my name is Michael Chupka. I'll be your presenter this afternoon. I am the Director of Education for PowerOptions. I've had the great pleasure of working with PowerOptions for about the past 7-8 years. I handle all the coaching sessions as a trial member or as a subscriber. You can sign up for a free coaching session at any time. It's essentially a 40 to 50-minute phone conversation. We'll walk you through the tools on the site. I'll answer any questions that you have about the various strategies. I can't give direct advice, but I can walk through the math with you on a particular strategy or adjustment. I've co-authored 2 books on options investing, one on naked puts and one on protective option strategies using married puts and collars. And I am versed in all 23 different strategies on the site. However, there are certain strategies that I will not trade in my personal account, things such as iron butterflies, short straddles, short strangles, and naked calls don't match my personal risk-reward tolerance, so I don't use those positions in my account. However, I am familiar with those strategies, so if you have any questions on those particular strategies, how to use the tools to identify positions or make adjustments, I'll definitely be able to help you out with that as well. All right, well, let's navigate over to the PowerOptions suite of tools, and we'll just do some quick reviews here, and then I'll have a quick question to ask everyone that's joining us. I apologize today. When you first log on to your PowerOptions account, it's arranged by a tab navigation system. This, of course, is a trial account that we're viewing right now. But when we first log on to our account, we'll start off in the main home tab. From the main home tab, we can access the free coaching session, so we can schedule one of those free sessions. You can go into the Learning Center. Let's go ahead and just link to the Learning Center menu. From the Learning Center, I can access various help articles, the full user guide or the quick start guide. I can link to one of those the coaching session scheduler registration form. Various tip sheets, archived webinars and tutorials to help you get more familiar with the tools, strategy help pages for each of the various strategies on PowerOptions, options education, free links here for further education, free education I should mention, and of course the glossary and different market activity sections. Underneath the main home tab, you can also access the Power Store for some of our various products. Follow along with the blog. For those of you on the trial, if you're looking to subscribe, you can link to the sign-up bonuses as well. And we go back to the main home menu, and if you're on a trial account, what you'll also be able to access, of course, is these 4 steps. Some of them we just saw in that Learning Center menu. But if you're just getting started, you want to take advantage of these 4 steps. Access the free user guide, flash tutorials that were in the Learning Center. We have a variety of webinars during the week as well, and of course that free individual coaching session. Now, another feature that's available right on the main home page when you first log in are the pod menu features, which you can customize based on what type of market activity or features you would like to view when you first log on to your account. So in this case, I see my market activity. I can see the changes in the various indexes, the VIX, the SPX, the NDX. Also over here, I have a field or a pod selected for ETFs, gainers, and losers. So I can see the view of the standard ETFs, top gainers and top losers for today. I can also click the tab up at the top there to view the inverse ETF gainers and losers and leveraged ETFs as well. As you can see, I can customize my view here for the different pods. You can simply click and drag a pod into a place where you'd want to keep it. The watch list, this just allows you to track positions that might be in your portfolio or that you're tracking for a potential purchase. And you have the webinars here as well. And in the main drop-down menu over here in the My Home feature, if I wanted to view other market activity selections, such as the earnings announced today, latest stock splits, stocks that have hit their new 52-week highs or 52-week lows, top industry gainers or losers, or top stock gainers and losers, simply click on the menu from the drop-down field. Let's just select the top stock gainers. That added it to the next available field. If I wanted to, I could also select top stock losers as well. So that would be now added to the main pod menu. And of course, if I wanted to remove a pod from my available menu, we could just click. If I wanted to remove the ETF gainers and losers, we'll just click the red X, and that would place it back into the drop-down menu. And then, of course, at any time, you can click and drag the various pods over to the field. Now, that's just some basic market activity information that you can select to view on your main home field as well. Let's talk about the rest of the tab features. The second tab, which is locked in place, is the My Portfolio tab. This is where we track our open positions in the profit and loss portfolio. You can view any closed positions in the historical reports. Analysis view shows us all the transactions we've made, organized by stock symbol. And then, of course, we also have the allocation. We can set up alerts and other views in the portfolio. We'll go through all of that towards the end of the presentation. As a default setup, you see now we have 7 strategies selected. We have covered call, naked put, bull put credit, married put, bear call, long straddles here as well, and collar. But as I mentioned, we support over 23 different strategies, and you can customize which strategies you want in your tab menu view. To do that, we'll simply click on the Other Strategies tab from the main tab menu. Over on the left, we see all the available strategies that we can select to view, and on the right, we see which strategies we currently have selected. And of course, down below, we could clear all of our strategies here in our tab selection, And then we could just select to have the bullish strategies available, the bearish strategies available with the links down at the bottom, or neutral strategies. Now before we go through that, I just want to launch a quick poll. It's the only poll we have in today's presentation. And what I would basically like to know is what kind of option strategies are you trading or researching right now? Are you mainly doing covered calls and naked puts? They are parity trades of one another, have a similar risk-reward profile. Are you looking mostly at protective option strategies, married puts and collars? Are you focusing on long calls and long puts? Are you looking at credit and debit spreads? Or are you focusing more on the calendar spreads or the time spreads? So just let me know what the main view is here. All right, well, I'm going to leave the poll open for another 15 to 20 seconds. If you haven't voted yet, I encourage you to do so. All right, so we've got most of our votes in. I'll leave this open for another 10 seconds. All right, 5, 4, 3, 2, 1. Let's go ahead and close the poll down, ladies and gentlemen. I'll share the results with everyone. So in our audience today, it appears we have 33% of our attendees are looking at covered calls and naked puts, and we have 67% doing the protective option strategies, married puts and collars. Let's go ahead and hide those results. Well, we've already got covered call and naked put available on our tab 1 and tab 2. But since the married put and collars went out, let's go ahead and move those. I'm just going to use the arrows here in the sort column for my selected tabs. I'll move married put up to number 1. I'm also going to move collar up to number 2. Well, then we already have covered call and naked put here as well. And of course, no one said they were doing credit spreads. So what I can do now is simply remove the credit spreads. I'm going to leave the custom spread menu up there. But if, for example, I wanted to look at a bearish approach, for example, I like to do collars, but maybe I also would look at short collars. Maybe I'd also look at covered puts, for example, by shorting the stock, a bearish approach. And we'll just add those from the other field. Now, short collars is the bottom one. So I'll select short collars and then simply click Add to Menu, and it would add it to the new available field. And then, of course, I could also add the covered put. Where did I just miss that? There's long put, of course. All right, so let's just go ahead and add that as well. The covered put there just for the bearish technique. But you can customize this any way you want to based on the strategies that you're trading. So let's go ahead and save that, and we'll just change our field. So we're starting off with the protective option strategies. To access the main view and the tools in a particular strategy, we simply click on that tab, and this will take us to the main strategy homepage. Now the strategy homepage will appear the same essentially for every strategy. Over on the right, we'll see the basic profit and loss chart. As a married put here, we're looking at a position where we're long stock, of course, and buying a put option. So we have a guaranteed minimum risk on our position and a theoretical unlimited upside profit potential. We have some product listings over here on the right underneath the profit and loss chart. The first pod in the home tab for any given strategy is our overview pods. This just gives some quick bullet points on the particular strategy with additional links to other help articles or other products for that particular strategy that are available. The second pod is just a listing of the tools pod. Now you'll notice, of course, that the tools are also listed underneath the main strategy. So if I wanted to access the search directly from the main married put tab, I could click on search, sample searches, search by symbol, and so forth. But we can also get a more full description of what each strategy is down here in the second pod. So the search tool, this allows us to search the universe of options to identify new positions based on our criteria. The sample searches gives us several themed searches that we can use as a starting point or stepping stone to create our own personal search in a given strategy. The search by symbol tool, of course, if I was in a given strategy and I just wanted to look at the available risk and reward ratios of, let's say, opening a collar on XYZ or ABC, I would use the search by symbol tool. And of course, you can also link to the portfolio tool from the tools pod in a given strategy. And the position insurance tool, now this tool is specific to the married put and the collar strategies. What this tool allows you to do is if you are currently owning a stock that has moved up in price, you have a stock that has a lower cost basis than the current market price, The insurance tool will show you potential married puts you could use to bulletproof the position, or potential collars that you could use to have a guaranteed return or a guaranteed return in a limited risk, for example. In the covered call tab, and we'll look at that in a little bit as well too, in the covered call tab, the specific tool that's listed there is called the Quick Find tool, so you can just get a quick view of the available call premiums that are open on your stock at this current moment. And of course, you can also access the historical suite of tools, the backtest tools, from our tools pod in a given strategy, the search tool or the search by symbol. Now, if you're on your 14-day free trial, you'll have access to the historical search and the historical search by symbol, as well as the historical option chain. But later on, we'll describe the historical tools are not available on the standard 20-minute delayed subscription or the real-time subscription. But we'll talk about that at the end of the presentation. Now, the third pod that we view in our strategy homepage, of course, is the Learning Center. And you'll have a variety of different links to different white papers or articles that discuss the strategy, theory behind the strategy, discussion on adjustments, and there might be a couple of links to flash videos or tutorials for that particular strategy as well. All right, but I'm going to link over very quickly to just the covered call tab, and you'll see that we have the same setup. Just wanted to illustrate that it's the same basic setup for every strategy tab. We have our profit and loss chart over on the right for the covered call menu. An available product is listed here as well. We start off with the overview pod, and then we follow that up with the tools pod for covered calls. And as I mentioned, the Quick Find tool is a tool that's unique to the covered call strategy, just as that position insurance tool is unique to the married puts and the collars. We still have the link to the search tool, of course, sample searches, search by symbol, and so forth. And then, of course, we have the Learning Center pod as well. All right, so to start off, let's say that we're interested in protective positions. We're going to look to open a new married put position. So we're going to start off in the married put menu, and the first tool we link to is the search tool. Now, if I'm starting off with covered calls, if I'm just getting started, I might use the sample searches menu in the covered call or the collar menu to view various theme searches to use as a stepping stone to create my own personal search. But as many of you know, for the married put technique, when I open up the search tool, here at PowerOptions, we advocate using the radioactive trading methodology. And in the main search tool, we want to start off with that default search criteria for the radioactive trading, which isn't available in the sample searches. It's only available in the main search menu. And when I first access the search tool, we see a listing of potential trades that match our default criteria. Now, these are not recommendations or suggestions. These are simply the positions right now that match that criteria set. Whenever you first access the search tool in a given strategy, you're going to be shown the basic data that apply to that technique. For the married put, we're shown the company. Here's a, looks like one of those South American banks, ABV. I'm not even going to try to pronounce it. Well, we're shown that we have the stock name and the stock symbol. The current price of the stock, it's at $145.84. It's up $2.89 today. And we're shown that right now we could buy a July 170 put for $30.60. Now, this would make our total investment $176.44, which looks expensive because the stock's only trading at $145.84. But remember, of course, we purchased a 170 strike put, so our maximum risk is only $6.44. The total net debit, or total cost in the position, minus our put strike price, $6.44 off of a 176.44 investment, or 3.6%. Now, how is this position identified? And you might be looking at this and say, okay, well, that's great. I see the basic things that I would need to see for a married put position. What is the stock I'm looking at? What is the current price? What is the strike price and days to expiration for my put? The ask price, my total investment, and my maximum risk. But how is these positions identified? Well, again, this is based on the default criteria set that's listed below the results. So when we scroll down below the results table, we'll take a look at the parameter field. Now, for every strategy, this is the same type of setup you'll see. We first click on search for the covered calls. We'd see the top 20 covered calls at the top of the screen. And as we scroll down below the results table, we'd see the parameter field in a very similar setup that we're looking here. The only difference between the strategies is the criteria that you would use. Now looking at the married put menu, we start off with the radioactive default screen. This is based on the radioactive trading techniques developed by Kurt Frankenberg. If you don't see this listed search when you first access the search tool, you can simply click the drop-down menu and toggle between various default settings or also any of the searches or criteria searches that you've set up and saved, and we'll walk through that in a little bit as well. So we're starting off with this radioactive default search, and of course over here on the left we see the basic criteria that we're using. We're looking for an expiration time frame of all available months, but we're forcing the days to expiration of at least 150 and 900 days out in time, so at least 5 months out in time. And we have some other basic criteria. We're not allowing the put to be more than 20% in the money. You could have set this up for the covered call as well. If you were looking for covered calls that were specifically at least 5% in the money, you'd put that into the percent in the money range. And if I was looking for covered calls or other strategies that were out of the money, we could just put in our preferred range for number of strikes or percentage out of the money as well. If I wanted to avoid earnings dates or ex-dividend date, might be something you'd look for in a covered call or naked put, you could simply check the box to only see positions that do not have an earnings date between now and expiration or do not have an ex-dividend date between now and expiration as well. As we're in the married put setup, we're not going to check those boxes because we're following the radioactive trading technique where we're going at least 5 months out in time, so we're almost guaranteed to pass through at least one earnings event in that time frame. Now in any of the strategies, after we have our option expiration time frame on the left, our range in or out of the money, and those earnings dates field, the center section is specifically our option information. It's mostly our option information. So we see here that we can set up a range specifically if we wanted to limit our net debit, the total value into the position. If we wanted to limit our monetary maximum risk, if I only wanted to look for married put positions that had a monetary risk less than $4 or less than $5, we could put that in as well. But I feel it's more important to focus on the percentage at risk, and that percentage at risk, of course, is the total net debit you're paying into the position minus the strike price of the put you're purchasing, that value, that monetary maximum risk, divided by the total net debit. So if my personal preference is only to view positions that, let's say, have a maximum risk between 4 to 7%, we just plug in what we want to see. Now for a covered call, of course, you wouldn't have a field for the percentage maximum risk, nor would you for the percentage naked put. What you would see in the covered call search is you'd look for positions that have, you'd have criteria available in the options section for minimum percent return if assigned, percent if unchanged, or downside protection. And for the naked put screen, you'd have fields available for the percentage naked yield and the percent to break even. And for a collar, of course, we would have a screen for maximum return or the percent if assigned, percent if unchanged, as well as percentage maximum risk. So you'll have different variations of the columns based on the particular strategy. We can't sort by a percentage return for standard married put because the percentage return is theoretically unlimited. Now the next columns that you'll see, or the next filters I should say that you'll see, and this will also be available in the other strategies, is essentially the liquidity. So if you had specifics of what you wanted to see for the number of contracts traded today or the percentage current option volume, previous option volume, or open interest, you just plug in the fields that you want to see. So if my minimum requirement is I only want to see married puts in this method where at least one contract or there's been some volume today, I can just put in greater than 0. And let's say I want to look for positions that have at least an open interest of 10 or greater. Now this might seem low to you, but because I'm following this technique of looking at least 5 months out in time, I have to keep in mind that the activity for the options that are 5 months, 6 months, or 8 months out in time are lower. If I was doing a covered call or a naked put search, I might look for a current option volume today of at least 20 contracts or 50 contracts and maybe an open interest of greater than 100 or 1,000. Again, the whole point of this patented search tool is for you to customize it based on what you would use to identify positions that match your specific risk-reward tolerance and the types of stocks that you would want to look for. So other things that you can do in the various strategies you can screen by, of course, we could screen by the Black-Scholes ratio. That helps you to evaluate positions that might be overvalued or undervalued. If you want to screen by delta, implied volatility or implied volatility ranges, time values, bid-ask spread, and so forth. Now, over on the right is most of our stock information. We'll start off with the basics, of course. The stock price. Let's say my portfolio only dictates that I can buy stock or I trade stock that's between $9 and $65 per share instead of $9 and $200 per share. We just make that change. If I wanted to put in values for the earnings per share growth, price to earnings, you look for dividend-paying stocks. I could put in a specific range there for my percent dividend yield, volatility, and there's a variety of technical indicators as well. RSI, Bollinger Bands, simple moving averages, and so forth. So the whole idea of this tool is to put in specifically what stocks you would look for in a given strategy and what kind of returns or limited risk you're looking for as well. Use the default settings, either in the sample search menu or here in the main search menu as a stepping stone to create your own personal search. Now, other features that you can use, you can screen specifically for sectors and industries. If I just wanted to look against basic materials or conglomerates, for example, I could select to screen just against those particular sectors or industries. And also, if I wanted to remove a sector or industry, if I'm looking at covered calls or naked puts, or even standard collars, I think I just passed it, what I might want to do is remove healthcare. So I'm not looking at any of the biotech stocks or anything that has a lot of volatility because of an FDA approval coming up. You can select to screen specifically against a sector industry or remove a sector industry. In addition to that, we also have various company lists that you can screen by. This default search is looking at only stocks in the IBD 100 and CanSlim list. And we can change that if we just wanted to look at ETFs and indexes. If I wanted to just look at the stocks in the S&P 500 or the S&P 5-star rated stocks or value line stocks as well, you can choose to screen just against those particular stocks, in those particular company lists. If I wanted to open my universe of options, I could select no lists. And that would open up into all optionable stocks, and then I'd want to use more of the criteria over on the right-hand side to help me filter that down. You can also create your own personal list. There's a text link here for create and modify lists. So if you had a list of just 50 stocks or 100 stocks that you trade on a regular basis, you can simply click on Create and Modify Lists, and you'll be prompted to enter in you can paste it in there, or you can just type it in, put in your stocks and save it, and then you can screen just against your stocks in any particular strategy. Again, I can also remove a specific stock list. So if I'm running this married put search, but I wanted to remove ETFs, or I wanted to remove the inverse ETFs, I can select that from the menu as well. Once we've made our changes to our search criteria, we simply click the Submit These Settings button. And now we'll narrow down our universe of options to those new positions that match our specific criteria. Now really all we did in this example is we changed our underlying stock price. We limited it to be stocks just between $9 and $65 per share. We adjusted the maximum risk and changed our option volume and open interest. Well, we have most of those criteria already selected in the default view. However, any of the criteria that you can filter by in the strategy, whether you're in covered calls or in the married puts, any of those 20 to 25 different option criteria and over 25 different stock criteria that you want to use to filter your results, you can select to view in the results table. We simply want to click See More or Less columns up at the top of the screen. This will link us to a configuration page. So some of the things I might have wanted to view in addition to what we saw is we had the open interest already selected, but maybe I want to look at the option volume because I selected that as one of my fields. Of course, I could always look at delta or the implied volatility. If I wanted to look at the other Greeks here, gamma, theta, or vega, you can select to view that in the results menu, the bid-ask spread, for example. And over on the left, of course, is our stock information. If I wanted to see if the stock's paid a dividend, I could check the view for percent dividend yield or any of the other filters there, the average stock volume, for example. And just check the boxes next to those filters that you wish to view in your results table. And then once you've selected your data, click Save and Return, and you'll be prompted to go ahead and close the window and refresh the page. So we still have the same results, we still have our search criteria, But now we've added those other columns there to help with our evaluation. My current option volume, the option volume today, the percent dividend yield. We see there's only one stock of my 5 results that pays a dividend, and of course the average stock volume. Now, as part of the default search in the results table, we selected to view the listed trades by lowest maximum risk to highest down at the bottom here. The first column on the left, sort results table. Now I can change that if I want to sort it by net debit, percent to break even, stock price, or if I wanted to sort it by any of the stock fundamentals or technicals, we could simply change how we want to see our view. Well, in this table, with my 5 results sorted by lowest maximum risk to highest, the first position we have now is an eBay position. The stock currently trading at 30.46. We're showing we can buy the July 34 put for a total investment of $35.51. The maximum risk would be $1.51 or 4.3%. Because this position matches my lowest risk tolerance, am I going to jump right in and select this trade? No. Now we're going to do further research and analysis once we've adjusted our search criteria and identified just those positions that match what we want to see. So for example, first thing I usually do when I'm evaluating my positions is from the More Information button next to my listed trade, I'm going to select Charts, and I'm going to select Big Charts. I want to take a look at the stock chart, make sure it's going in a direction that matches my expectation for this strategy and matches the fundamental direction for this particular strategy. Now, on Big Charts, you can customize it any way. I should say you can customize it in a variety of ways. You can compare it to different indexes here over on the left. I can select various indicators if I wanted to view this against Bollinger Bands on my chart, or I wanted to show splits or earnings. We could also select to view the MACD, the RSI, slow or fast stochastic, for example. So anyway, you typically customize a chart and view that. You can select it here in Big Charts, and then down below it allows you to store the chart settings, so every time you open it back up again, you'll see just the fundamental or technical criteria you use when analyzing a stock. Now, when I looked at the stock chart for this first position on my results, if I decide for whatever reason I don't like this particular pattern or this stock doesn't match what I want to use, hasn't been trading in my desired direction for a particular strategy, then I'll just move to the second position. So we'll move from eBay, and then I can look at NTAP. We'll take a look at the stock chart and see, does this chart now better match my expectation of what I want for a particular trade in a particular strategy. All right, let me go ahead and close that. If I decided, however, that I was going to stay with eBay, I like the chart, the next thing I'll typically look at is the company information in the news. I want to take a look at the recent headlines. Is there anything out there that might cause me hesitation for entering the position? I also want to take a look at maybe the last earnings and events. And of course, view the profile. If I'm not familiar with the company, what sector or industry that they're in, I'll take a look at the profile to get a better view of that particular position. Now, you might have noticed that even though we have eBay at the top of our list with that July 34 put, there's also a second combination that's shown for us on eBay using the July 33 strike put. This is a higher risk, but we're using a lower strike price. Now, why this is important is because using this particular technique is you'll have to evaluate which put option best matches your expectation of the stock and your personal risk threshold. Both of these potential put positions on eBay match my criteria. They have that risk between 4 to 7%, and the other stock criteria I selected. But depending on my expectation after I looked at the stock chart would help me determine would it be better to use the 34 strike put or the 33 strike put. And of course, what I might also want to compare this to is, are there other opportunities? Is there a July 32 put I could use? Or what about the July 31 put? So my next step in evaluation, we already looked at the stock chart. We looked at the company information. Now in the Married Put menu, I'd want to look at the Search by Symbol tool. And this will open up a view. We talked about the Search by Symbol tool earlier if I just wanted to look at positions one stock at a time. When we go to the Search by Symbol tool, we'll now be able to see the different criteria that are available. The different combinations. if I'm looking at a covered call or a naked put, rather than link to the search by symbol tool, I prefer to link to the option chain at this time. But in those strategies, I'll still do the same processes. Once I've changed my criteria and have my results, if I'm looking at covered calls or naked puts, I would look at the stock chart first. If I didn't like the chart, I'd just move to the next position. After the chart, look at the company information, news and profile, and then after that, take a look at the earnings events, of course, and then look at the search by symbol tool here, or a covered call and naked put, I'd look at the option chain. Well, here we see that we have the different combinations. There's our first one here, the July 34, that's highlighted for us as it's the one we linked over from. We have our July 33 strike put that we saw, it has that risk of 5.2%. And what's interesting is that our July 32 strike put still matches our criteria, doesn't it? Remember, we put in a risk of 4 to 7%. Well, this matches our criteria, has the open interest that we were looking for, that minimum requirement, but the reason why it didn't show up in our results is because there are no contracts that have been traded today. Remember, we looked for just a basic view of the option volume greater than 0. Well, these three positions essentially match our risk preference between 4 and 7% that we were screening for on this particular stock. Why might I not select, of course, the one with the lowest at-risk amount, the 4.1%? Well, again, after I looked at the stock chart, I've had a better view of what my expectations for eBay might be over the next 30, 60, or 90 days, for example. The stock's currently at 30.42, so if I have a stronger sentiment that the stock might be trading at or near $32 in the next 30 to 60 days, I might be tempted, or I might consider, I should say, using the 32 strike put with the higher at risk amount. And of course, following the radioactive trading techniques, why I would do this is because to apply the various income methods, the 10 different income methods that Kurt uses, usually the best opportunities appear when the stock's trading right at the put strike price. So if I felt over the next 30 to 60 days, eBay is more likely to be trading at 32 than 34, I might be comfortable taking the higher risk. It's still below my maximum threshold. It's at 6.4%. So in this case, I might have an opportunity to do income method sooner, even though the risk is higher. However, if I'm more conservative, and I still think eBay might be up at $34 in the next 60 to 90 days, I might still stick with that 4.1% risk. Going deeper in the money, taking the 4.1% risk, realizing that now I'd probably want the stock to be trading near $34 per share before making any further adjustments. And that's what the search by symbol tool will help you to do when you're evaluating your positions from the search results. And of course, again, if I'm in the covered call or naked put, I'd go to the option chain. All right, now my next step, what have we done? We've gone through the stock chart. We've gone through the company information. Then we use the search by symbol tool to evaluate the position. And let's say that we did decide that we wanted to use the 33 strike, the one that was in the middle with that 5.2% at risk. My next step, of course, is I'm going to evaluate some what-if scenarios, take a look at the profit and loss chart. And this is not, of course, the steps that you have to take. You might decide that based on what you like to do, you might want to look at the stock chart first and then look directly at the profit and loss chart to run your what-if scenarios before looking at the company information or before looking at the search by symbol tool. I'm just reviewing what's possible with the powerful suite of tools, how you can quickly navigate to further research and analysis, but my steps don't actually have to be your steps. This is just what I do when I'm evaluating my personal positions. Now, why are we linking over to the profit and loss chart? Well, it's always nice to see the position graphically. Here we have our standard hockey stick chart for that eBay position. Remember, using that 33 strike put, which gave us a risk of about 5.2%. The position specifics are listed for me monetarily at the top. And then I have my risk-reward profile. We have our blue hockey stick graph. This shows us the risk-reward of the married put position at expiration. Notice that 5.2% loss occurs if and only if I hold the position all the way to expiration and make no adjustments. The curved red line shows us the profit and loss at the halfway point on April 1st, halfway between now and expiration. And as you can see, if I held the position all the way to July expiration, my break-even would be $34.82. I need the stock to be trading at 34.82 in order to make a profit, or above 34.82 in order to make a profit. But based on the halfway point, you see you don't need the stock to be trading at 34.82. The stock could be trading roughly at around almost 29 or 32, I'm sorry, it's probably about $30 per share on April 1st, and we'd realize a profit based on the time value still remaining in our put option. No, I'm sorry, that's way off 30.42. It's probably at about $31.50 or $32. I apologize, I wasn't reading the bottom of the chart correctly. But what if my sentiment was that I felt eBay might be trading at around $31 in the next 14 days or the next 10 days? Well, down below the profit and loss chart, I want to run my what-if scenarios. There's a field here to calculate expected profit and loss. So I'll put in a range. Say my expected price is $31, and I expect it to hit that in the next 10 or 15 days or so, so we'll just select December 30th. So what would my position look like if the stock was trading at 31 and 12.30? Well, you see here, we're almost essentially right at the break-even point. If the stock was trading at 31, we'd have a gain in our stock of $58, a theoretical loss on our put option of $50, so we'd be just about at break-even. I don't need the stock to be trading at 34.82 to realize a profit in the next 10, 15, or 20 days. Okay? Now, I might still wait for the stock to be trading at 33 before performing an income method, but this just allows you to run the what-if scenarios of what happens if or what happened why. In the reverse, what happens if the stock falls to $28 in the next 15, 20 days to December 30th? Well, we'd have a loss of $242 on the stock and a loss of, or a gain, I'm sorry, of $145 on the put option. So our net expected theoretical loss would be $97, but that's only half of the maximum risk that we took on this position, so we still wouldn't be at our maximum risk position. In addition to that, why I use the profit and loss chart aside from running my what-if scenarios is what if I had an idea of, okay, I'm buying eBay at 30.42, I'm selling the July 33 put. Can I potentially jump in right now and sell the short-term call, the January 31 call or the January 32 call against it? What would that do to my position? Well, if I scroll up to the top on the profit and loss chart, we're in the custom spread menu. I have my 100 shares of eBay at 30.42, one July 33 put contract for 440. Of course, if I wanted to evaluate this based on 300 shares of stock and 3 put contracts, I can just change my quantity view. But I have 2 extra fields here where I can simulate doing other adjustments against the position right now. For example, we talked about what would happen if I sold the January 31 call against eBay right now. It's currently trading for 90 cents. Well, my maximum risk was $1.82 on this position, so I'm almost canceling half of my risk by selling this 31 call right now, aren't I? Well, let's see how that would look. From the View Options menu, we selected January, and I'll simply click on the text link for the 31 call. This will add this into my field below. So we have the shares of stock, the 33 put. We change the action to sell the 31 call, and I'll use 3 contracts as well. I don't have to put in a price. Since I selected to sell this call, when I click Submit, it's going to grab the natural bid price for the call. If I was selecting to buy the call, it would select the natural ask price. Of course, you can put in whatever price you want, but we just left that alone there, and it grabbed the natural bid price. Let's scroll down, and now we see what we've done to our position. Well, part of the problem here is that we did sell a 31 call, we did collect 90 cents, so our risk should have decreased. Why did our risk increase? Well, the problem with this type of setup, remember, is we have a July 33 put that we paid $440 for. So our total investment of stock plus put to begin with was $34.82. That's the total we had into the married put, and now we've agreed to sell our shares of stock at $31, which is 3 points below our initial cost basis. So what we end up with is sort of a tent profit and loss chart. We did collect premium, which lowered our risk on the downside. So if the stock fell, we'd have lowered our risk by 90 cents. Oh, I'm sorry, I just didn't select. There we go. So on the downside, we did lower our risk. The problem is we increased our risk on the upside. See, if eBay really takes off, and it's highly unlikely that it would, but if eBay jumps, let's say from 30.35 by January expiration, jumped up to $38 or $39, our put would decline in value, it would decrease as it comes out of the money, and we're not gaining anything more on the stock because we've capped our gains at 31. So essentially we took a position that originally had a $1.82 loss, and remember our total cost basis into the position, well, 300 shares was $10,182, and we have a guaranteed, the problem is with this 31 strike call, we've capped our gain, and as the stock continues to take off and move up in price, we're not gaining any more advantage on the stock. And the maximum return you could make now is 2.4%. So you'd have to evaluate, does this match my personal goals for the position? It's usually better to wait for the stock to move up in price before looking to sell a call. And typically with this setup, or I should say always with this setup, you rarely want to sell a call that's below the put strike price. But what's important really is that you can use this to set up different scenarios, what-if scenarios, to adjust the position. When I'm evaluating a covered call and I link over to the profit and loss chart, what I'm going to do is potentially add a put option in the same process. I'll click on View Options if I'm evaluating a covered call, select that same month to expiration, and look at the out-of-the-money puts to see how that would affect my covered call. I'd have now a limited maximum risk on the position, but I'd affect my percentage return, and I'd have to see if that still matches it. So you can just apply various combinations here after you've identified a position in the search tool. All right, now the very last step, once we've identified our position, done our further research and analysis, if you're using Options Express or Brokers Express, you can use the broker link, and this will allow you to add the trade to that account, the Brokers Express or Options Express account. You can enter as a married put or leg into the position. You also have this, of course, in the covered call menu. But if you're using a different broker, that's fine. You just log on to your broker, place the trade, maybe use your limit orders based on what you're looking to accomplish. And then you want to come back to PowerOptions, and what we'll do from this menu is we're going to select to add it to the portfolio. Click Add to Portfolio. If you haven't created a portfolio yet, you'll just have the selection here for New Portfolio Number 1. And you could just give your portfolio name. You can call it Married Put Portfolio, Paper Trades, IRA Account Number 6532, for example. But if you've already created other portfolios, you can just select which portfolio you wish to track this particular trade. And I'm going to enter it into the My Married Puts trade. And once I select Insert, it's going to pull up the field for my specific entry. So it gives me a long stock entry and a long put entry. And I'll just put in 100 shares for this particular paper trade, 0 commission. And enter in one put contract as well with a commission fee of 0. So, of course, if you had a different entry price, you would just change your prices, or if you did this on a different day, you just put in the fields, put in the values, I should say, in the different fields that match how you're going to track the position. And once I have my data entered, we'll simply click Submit. This will enter our position into our profit and loss portfolio. Now, in the profit and loss portfolio, we show everything as a linked position. So I have various 12 married put positions here. There's an Altera position. You see that I've set an alert. There's a variety of different alerts you can set in the portfolio, and this particular one has been triggered. We also see that on Linear Technology, LLTC. One of my set alerts has been hit, and there's a variety of alerts you can set. You just click on View here in that column. Excuse me. Our new position that we entered, of course, is right here. It's in the middle, listed alphabetically. There's eBay, stock plus put. We're showing our entry prices and the current prices right now. And, of course, over on the left, we're showing it as a total position. What I mean by that is that when we're looking at the married put, you see does each individual leg, and then over on the right, we're showing the position as a whole. What is my current liquidation value on each position, and my future expiration value, percentage-wise and monetarily. Now, the profit and loss portfolio here is where we track our open positions, and I'm actually going to move away from this right now, and I'm going to move to a different portfolio, and I'm going to start that different presentation I mentioned. One of the most powerful things about the portfolio tool is evaluating the different rollout opportunities or adjustments using what's called the position analysis screen. So for example, on this Altera position, you see that one of my alerts has been triggered, the stock has moved up in price. Well, what I'd want to do now is evaluate the potential rollout opportunities, and what I would do next in my portfolio the profit and loss portfolio is we'll use that more information menu, and I'll go to position actions. And this is, of course, where I can close the position, close the leg, edit the position, add a dividend, for example. But what we want to view right now is the position analysis. Okay, so when I click on the position analysis screen, this is going to pull up an evaluation of my position. So we start off with a basic view of my stock position and my put from the original purchase price. We're shown where we stand right now, the current stock price, my initial break-even at expiration, my current put option bid, my days remaining to expiration, and the original maximum risk on the Altera position. And over on the right, of course, we're seeing the profit and loss chart. As I scroll below that view of my current position, we see some calculations for my total original position value. So my total invested was $37.49. My liquidation value after 28 days, if I sold to close the stock and sold to close the put option, would be $188 or 5% after 28 days. It's current liquidation. And then, of course, the future expiration value is shown as well. If I held the position all the way to, I believe it was June expiration and made no adjustments, what would my gain or loss be? Right? Now, down below, as we scroll down below that position analysis there, that liquidation value versus future expiration value, we're now shown some rollout opportunities. In a moment, I'll show you a couple of positions in covered calls, what the rollout opportunities will look like there, and sort of a philosophical discussion on rolling in that special 10-minute presentation we discussed. But for this particular married put position, you see I have some adjustments for income method number 1. This is following the blueprint ideas, but the common setup, I could sell a call against that married put right now. I could choose to sell the January 37 call for $1.20. My maximum percent if assigned would be 8.2%. Remember, we'd have a liquidation value of 5% if we closed it right now. I'd lower my maximum risk to 3.6%. Well, that's great to see the adjustment that's great to see the adjustments monetarily in the data of what would my new percent if assigned would be, my new maximum risk, for example. But if I also wanted to compare it graphically from this rollout adjustment, the suggested or possible rollout adjustment, we'll use that more information menu again, and we're going to click on Simulate Trade. And this is going to give me a comparison now of the two positions. So we see over on the left in the red, this is our original current, I should say, married put position on Altera. Our total cost of $37.59, maximum risk of 6.6%, and the current liquidation value of 5%. That's shown for us on the left, our current position. And over on the right is the evaluation of our new position, highlighted in blue. So we still have the stock and the put, and if we sold that January 37 call for $120, we would lower our maximum risk on the downside to 3.7%, and we'd have a potential return of 8.2% over the next 30 days to January expiration. Now, it's great to see the comparison side by side, but what if we also wanted to view it graphically? Let me scroll down below here, and we have our position shown on the left, what our Altera position would look like on January expiration. We have the 35 strike put, of course. The current stock price is $36.66. That's our green line. And then over on the right, shown what our new position would look like on January expiration, stock plus put plus short call. Now, why is this relevant? Well, if my expectation going forward is that over the next 30 to 60 days, Altera might be trading up at $38 or $39 per share, I might not want to make this adjustment right now. I'd be better off holding the position as is, holding the married, didn't come up right, holding the married put if I'm expecting the stock to be trading up near $40 per share. As opposed to the short call, if I sold income method number 1 right now, if my expectation is Altera is going to be trading here, well, I've sort of capped my gain. So depending on my expectation going forward now will help me determine, is this the right income method for me to do? Or would I want to look at some of the other income methods that were listed? Or maybe I just want to hold the trade for a longer period of time and wait for the stock to make another move before making an adjustment. Now, This is what you can do with these tools, how powerful these tools are, that you can evaluate it both monetarily when you're looking at an adjustment. We do all the heavy lifting for you, and you can also look at it graphically. Now, I want to navigate over now to a different portfolio and to the special presentation, which applies, it's focused on covered calls, but it's going to apply to the married put techniques, even collar techniques, and of course covered calls and naked puts. Okay, so let me just navigate over to start our slide presentation. We're going to discuss something, basically, waiting to roll. You just saw we were looking at Altera, and we used that profit and loss chart there, and the profit and loss portfolio, I'm sorry, to evaluate where the position stood. We looked at the position analysis to see where our position stands right now, and then we compared that to some of the rollout opportunities that were listed. Well, just because a rollout opportunity is listed in the portfolio, does that necessarily mean that you have to make the adjustment? Absolutely not. In any strategy, whether you're using the married put techniques discussed in the blueprint, or you're using standard collars, or if you're doing covered calls or naked puts, sometimes you might want to wait to roll a position. Now, patience, of course, is a virtue for any trader, and it can lead to higher profits if your expectation is the stock's going to continue to move in your direction, whether that's up or if you're in a bear strategy if it's down. But you also don't want to miss an opportunity. The tool that we just showed will really help you evaluate, where does my position stand right now? If I leave it alone, what's going to happen if the stock continues to X price or Y price, or what's going to happen if I entered this adjustment? Okay. Now, at times, it might be best not to simply roll a position because the opportunity is there. You may want to wait for other opportunities before selecting a new strike or applying a new adjustment. We want to take a look at two covered call examples today, but the theory behind what I'm showing is also going to apply to the married put techniques, that sometimes just because a rollout opportunity is listed doesn't mean you have to take it, doesn't mean you have to force a trade if it doesn't match your expectations. But let's talk about two covered call positions. There's one on ExxonMobil. I talked with a customer earlier this week regarding this position. The customer has a position, a covered call, that is now in the money heading into December expiration. The investor wants to hold the stock to avoid assignment. So of course he has really only a couple choices to make. Either choice he makes, he's going to have to buy to close his call that's now in the money, but what is he going to look to do after he closes the call? And then there's an opposite scenario on REE, rare earth elements, that is now out of the money heading into December expiration. Customer entered into the covered call. The stock dropped shortly after that. Customer is actually holding a January strike call option. Now the goal here is to roll down the position to help hedge the loss on the stock itself. And of course, I have hedge in parentheses there because there's only one way to truly hedge a long stock position. And of course, we'll discuss that. But let's look basically at the first covered call position. On on December 1st, customer opened an XOM position, bought about 100 shares of stock at 70, and sold the December 70 call for $1.18. Now the situation today on 12/15 is that ExxonMobil is trading above $72 per share. The call that he sold is in the money, and he wants to continue to hold the stock and maybe earn extra income. Now, with the stock position being in the money and being this close to expiration, it's near the maximum profit, of course, he expected when he first opened the covered call. And what I mean by that is that there's really little time value left in the call option, so he's near the maximum profit if he's assigned at expiration. Those of you who are experienced with covered calls trading would think the common rollout, I'm going to buy to close the December 70 call, stock above 72, and I'm going to sell to open the January 72.5 call. Well, okay, that's a reasonable rollout opportunity, but what about other positions? What other strike prices might be available? Well, let's take a look again back at the portfolio tool on PowerOptions to see where that position stands. Now here's the covered call view, and we have our ExxonMobil position, stock price of 70, that was the entry price, and we sold the 70 call for $1.18. The stock is now trading above, right at 72, 72.01. And we're shown, of course, a price of $2.09. The buyback cost for the position is $2.09. Now over on the right, we can compare where the position stands right now. My original expected gain, or the original expected gain on this customer's position was 1.7%. Smaller premium the customer, this is actually a position a customer has been in for a long time, has been continuing to roll. We're just using the example of buying the stock at 70. Because we're near to expiration and the position is in the money, of course, if the position was liquidated right now, sold to close the stock, and bought to close the call, customer would realize a return of 1.6%. Again, very near to the maximum expected profit. And if the position is held all the way to expiration, and I mean by all the way I mean the next 3 days, the customer will realize a 1.7% return. But remember the goal and the expectation. The goal for this customer is that he wants to hold the position. So naturally, he's going to have to buy to close this call, and the common view of covered calls trading is we just roll to the next highest strike price 1 month out. Well, let's take a look at the evaluation. Again, we'll go to Position Actions, and let's select Position Analysis. And as we discussed just before with that married put we saw in Altera, we have a breakdown of our original position. ExxonMobil's trading at 70. Sold the December call for 118. As we scroll down, we have the graphical view of our profit and loss chart, where our position stands right now. And we see again that liquidation, original position value, I apologize, our current liquidation value. We've made roughly 93.2% of what we expected to make on this position. And of course, if we hold it all the way to December expiration, 3 days from now, the maximum gain of 1.7%. But then we're shown some potential rollout opportunities. Well good, this actually added a different one for us. Earlier today it was just the 72.5 call that was shown. But now we're shown we can roll to the January 70 call for a new potential percent of assign of 2.7%. So we'll gain 1% of potential profit instead of letting ourselves get assigned by rolling to the rolling to the 70 call for maximum 2.7% of assign for the next 38 days, and we have a 72.9% chance of the stock staying above 70. Or if we want to earn extra profits, we could roll to the January 72.5 call. We'll collect $1.22, which would make our adjusted net credit 26 cents. That includes the original premium we received minus the buyback cost. So our potential percent return if assigned at January expiration will be 4%, or 44.9%. So we gain an extra 2.3% roughly by rolling to the January 72.5 call. And of course, as I mentioned, we can compare them side by side by using that More Information button and going to Simulate Trade. But what about other opportunities? Why are there no February opportunities shown, and are there any other further months out? Well, in this scenario, the next expiration series, we do have the January series available, so we can evaluate these. But if we link to the option chain to see what else is available, what other opportunities might be available to roll, we see that we have our December series. It's coming up to expiration. And scroll further down, and we see the January 72.5 call that we linked to. But for this particular option series, there are no February or March options available. The next available series is April. Well, that might be a small problem if you're not comfortable with the return that's available for the January rollout opportunities, or you maybe think the stock's going to grow further. You might not want to just simply roll to the next strike price. You have a couple of options. Number one, you could simply buy to close the call now and then wait for the stock to move further, look to sell a call at a higher strike price if the stock continues to move up. Or number two, you might want to buy the call back now and then wait till Monday or Tuesday of next week. As we're approaching December expiration, we don't have a February series available. But Monday and Tuesday of next week, that new series will be released, so we'll be able to evaluate potential rollout opportunities going to January, selling a new call for January expiration, that 72 and 70 call that appeared here, but compare that also against the new February series, the 70 strike or the 72.5 strike as well. So although the tools will greatly help you identify what positions and the new new calculations for the new percentage return if assigned, the new downside protection, what matches your risk-reward tolerance. But remember, patience is a virtue. This also applies to the married put techniques. Just because an income method is shown doesn't mean you have to apply it. Well, the adjustment thoughts in the XOM, well, we need to close that call to avoid assignment. We could, of course, roll to that 72.5 call if it matches our personal goals. However, if I'm right now expecting that XOM might be trading at $74 or $75 in the next 30 or 60 days, I might not want to sell the 72.5 January call right now simply because I'd be faced with the same discussion 30 days from now. In January expiration, I'm looking at, well, what do I roll to now that I let the position get in the money again? Other opportunities weren't shown because the Aprils were too far out in time and there's no February series available yet. It's going to be available in a few days. So it's not necessary to simply roll to whatever opportunity is shown. You want to close, in this case, the December call or the call that's in the money to avoid assignment, if that's your goal and expectation, and then wait till Monday or Tuesday of next week to evaluate the roll or continue to hold it if you expect the stock to continue to move up. And then you might be able to wait to sell the 72.5 call for a better premium or the 75 call in the January or February series after the stock moves up in price. Now, just take a look at the REE example as well. This is reverse of what we just looked at with XOM. For the REE example, 100 shares of rare earth elements were purchased at 11.30. And at the time, the January 12.5 call was sold for 75 cents. This was a much more volatile position, so there's a much more inflated premium. Now, rare earth elements dropped shortly after that. It's currently trading at about $9.50. So it's our different scenario. It's declined, and you may look to try to hedge some of the loss you've taken on the stock by rolling the 12.5 call for January down to, that's another important point, I'm sorry, this is the January call. It was sold further out in time in mid-December. Okay, so we may want to buy to close to 12.5 and maybe sell to open at 11, or a 10-strike call to reduce some of the loss we're taking on the stock. Well, we could buy to close the January call now, but roll to April. Well, again, that's another 122 days out in time. It's the next series that's available out to January, after January expiration. We have to evaluate, does this match our personal goals or our time frame? And let's go back now to the portfolio tools and take a look at where REE is right now. In the profit and loss chart, we have the stock at 11.30. We sold that 12.5 call for 75 cents. The stock's moved up a little bit since we started this presentation. It's now at 9.88. The buyback cost for our short call is 20 cents. Now, over on the right, we look at the position as a whole. Our total expected gain or loss was 18.5%. That was if and only if the stock was trading above 12.5 at January expiration. If the position was liquidated right now, there'd be a loss of 8.2%. And if the position is held all the way to January expiration, the stock's still trading around the same price, there'd be a loss of 6.4%. But again, what adjustments are available right now? I don't want to do this all in my head. I don't want to do it with pencil and paper. So let me use the PowerOptions tools to see what adjustments are available for the REE, rare earth elements, covered call position that has declined in price. Again, in the simulate trade, or the position analysis, we start off with our original stock and call entry price, where the position stands right now. This is in real time, so we see that the stock has jumped up again, is now trading at 10.01. Just from when we linked over, it went from 9.88 up to 10.01. The default break even is 10.55. The 11.30, of course, minus the 75 cents. And it shows you our time value left in our call price, current call delta, and the days remaining to expiration. As we scroll down, you have that original position value, current liquidation value, again a loss of 7.5%. That changed in real time because the stock had moved up to $10 now. We were looking on the profit and loss portfolio, it's only at 9.88. And our expected return, future expiration return, if we hold the position and do nothing, the stock's trading at the same price, would be 5%. Well, we look at our available rollout opportunities, and we see that we could roll down to the April 11 call, or roll to the April 12.5 call, or even the April 11 call. But this is 122 days out in time. It's a long time frame to roll a covered call. Now we see here that the math is done for us again. If I rolled to the April 11 call, and we were signed at April expiration, we'd have about a 12.2% return and there's a 41.8% theoretical chance that the stock would remain above 11. Now, why am I not seeing any January positions, or why am I not seeing any February positions? And again, rather than analyze these positions, let's go to the option chain and evaluate where we stand. Well, there's our December series. We have January options, but we're holding the 12.5 call. We're not going to be able to get a lot of premium by going to the 11 strike or the 10 strike to turn this loss into a potential gain, so it wasn't shown. And then again, we don't have any February options, so what we're looking at here is the next available series is April. Well, we do have a January series. We have a January covered call right now, so this is another scenario. Let's see here. Let's go back. Another scenario where we might want to wait to roll the call until the new series is available. After Friday, the February series will appear. So we want to roll the call to hedge a loss in the position. Remember, the only true hedge for a long stock position is using a put option is a collar or a married put strategy. It's the only one that gives you a limited risk or a limited loss that's guaranteed. Now, when you were evaluating that rollout, if those April positions, that April 11 call that showed a new 12.4% return if assigned for the next 122 days, if that matched your personal goals and expectations for the position, that might be a position you want to use. Well, the cons there of rolling to the April calls that you might be locked in that position for another 122 days, depending on what the stock does, the fluctuations in price or how things change. So you might not be able to make any adjustments and stuck in the position. Of course, this is another view where you just might want to exercise patience. You might want to hold the current position and evaluate the rollout on Monday or Tuesday. We don't have to close the January call right now because we're not risking assignment, and we're 1 month further out than the upcoming expiration, but we are losing on the stock and our call has dropped significantly in price. Now, the cons with holding the position, of course, is that the stock can continue to fall over this weekend before Monday and Tuesday of next week when the new February series is available, resulting in further losses. And you could also use the profit and loss chart, as we did before when we were evaluating that first married put, to see if there were collar or married put opportunities that could help us limit our risk but still have a potential gain. And our other choice, of course, is to take the loss, liquidate right now, and then evaluate what went wrong. But just because a rollout opportunity is shown in the profit and loss portfolios doesn't mean you don't feel forced to go make the trade right now. Evaluate it using that simulate trade feature to see the two comparisons side by side and see, does this match my personal risk reward tolerance? Does this match my goals and my expectations of what's coming up next? I wanted to just do this brief presentation for today as we are approaching December expiration, and these two positions we discussed were actually two positions I had with PowerOptions customers during coaching sessions for this week. One customer, of course, is in that XOM position, wants to roll the call but didn't like the January series, so he might want to wait, just buy to close the call to avoid assignment, and then Monday or Tuesday see what the February covered call opportunities would look like on his position as well as the January. And in the case with REE, you could roll to the January positions, but it couldn't be rolled for a credit. It would actually cause a further loss on the position because of the premiums. And of course, the April positions were just too far out in time. So the idea is maybe just hold the position over the weekend, might get a little bit more decay out of that January call, and then Monday or Tuesday of next week, look at the rollout opportunities on REE once the February series is available. Okay, well, thank you for bearing with me on that one, ladies and gentlemen. Just wanted to present that quickly. Of course, let's just wrap up. Why PowerOptions? What we discussed today, using the tools, of course, and some of the other education. You have a patented search of over 23 different strategies. You can customize searches and screen views. You have various tools to compare the various strategies side by side and do further research and analysis. Spent a lot of time today looking at those portfolio tools, how powerful it is to help you not only see where your position stands right now, but to evaluate it compared to the current liquidation and the potential future expiration value, see the monetary values of the potential rollout opportunities or adjustments on the position, and then compare them side by side in that simulate trade feature from the position analysis to see what matches your expectations and your personal goals for the stock going forward. Of course, we also offer toll-free customer support and email support, and the access to the historical data you have on your trial right now. That's an extra fee on top of the basic strategies. in addition to various help articles. Now, the subscription services, the 20-minute delayed service gives you access to all the tools in the tool menu and all strategies. That's $59.95 per month. Discounted annual rate, $600 for the year. We also offer a real-time service, which is $79.90 per month, or a discounted rate of $800 for the year. Now, the historical data, the historical search, backtesting, and the sample search and the historical chain is not available on the 20-minute delayed or the real-time subscription. You can get 3 months access to the historical suite of tools for $99.95. If you're already on the real-time service, however, it's actually cheaper just to upgrade to the professional level of service. The professional level of service includes everything on the real-time service, excuse me, but with unlimited access to the historical suite of tools. So it's only $20 more per month over the real-time. So it's actually cheaper if you're on real-time to upgrade to professional than to be on the real-time and purchase the 3 months access to the historical suite of tools. And we also discussed some of the educational products. We looked at the main covered call menu. You saw the covered call course that was listed. That's a book, DVD, and workbook written by Ernie and Greg Zerenner. The purchase price, including shipping for the covered call course, is $210, but that includes 2 free months of the PowerOptions real-time service. It's about a $160 discount there off the $210 purchase. We discussed in the beginning the radioactive trading techniques. Of course, that's based on the blueprint, which was written by Kurt Frankenberg. You can read more about his products and the radioactive trading techniques at radioactivetrading.com. And we also have a variety of books that are located in the Power Store. These are all low-cost books, $14 to $20, loaded with information, naked puts, protective option strategies, a guidebook, introductory guidebook for married puts and collar positions and how to use the PowerOptions tools to identify them, and of course the Iron Condor book, which focuses mainly on the Iron Condor techniques. And what we showed today was the PowerOptions suite of tools, which are designed for self-directed options investors. If you feel you're not ready to be self-directed, we also offer PowerOptions Applied, sort of an advisory newsletter service. They offer several portfolios in Iron Condors, covered calls, double diagonals. They pick the trades for the subscribers and send out emails if they're managing or adjusting the trades. You can read more about that at www.poweroptionsapplied.com. And of course, if you were interested in that radioactive trading methodology, the radioactive trading techniques, but wanted to follow over someone's shoulder, watch how they apply the technique in the market, the Efficient subscription at radioactivetrading.com allows you to follow over Kurt Frankenberg's shoulder and watch as he makes his adjustments in the Efficient portfolio. And you can read more about that at radioactivetrading.com. Now, our upcoming free events, of course, every Friday at 4:30 p.m. we host an open discussion. We don't have any planned material, really, for the open discussion presentation. It's essentially just a question-and-answer forum. This week, we're going to be doing something special. It's the end of the year, end of the year open discussion presentation. It's actually going to be an hour and a half long, so an extra hour from 4:30 p.m. Eastern to 6 p.m. And you can sign up for that right at on PowerOptions, of course. And every Wednesday at 12 noon, we host the Introduction to PowerOptions presentation. And every Tuesday and Thursday at 12 noon, Kurt Frankenberg hosts a webinar to introduce his radioactive trading techniques. I know I went a little bit over, about 15-20 minutes over, but I thank you all for staying with me. If you do have any questions about the PowerOptions tools, what was discussed today, please feel free to contact us at any time. You can send us an email to support@powerop.com. Or you can also call us toll-free during market hours. You can reach us at 877-992-7971 if you live inside the continental U.S. Or you can also, if you live outside the continental U.S., you can reach us at 302-992-7971. Of course, there's contact links on every PowerOptions page. Well, ladies and gentlemen, thank you very much for joining us this afternoon. I hope you all have happy trading and a good week going into expiration. I also hope to see you all at some of our upcoming presentations, Tuesday and Thursday at 12 noon, where Kurt Frankenberg will host his radioactive trading presentation, Introduction to Radioactive Trading, and then, of course, the end of the year open discussion presentation that will be held Friday at 4:30 Eastern Time. Take care, everyone. If I don't see you then, happy holidays and happy trading. Good night.